What's up, guys? Welcome back to Maverick's Point of View. So, back at y'all with another video for the free training course, for the free mini course. So, last video we went over trends, right? There's only three things that can happen: an uptrend, downtrend, or a consolidation trend, aka the matrix, or no trend, right? It's just going back and forth, and we want to avoid the matrix. It's that simple. Now, what I want to go over this video is multiple time frame analysis. So that's a complicated way of saying the bigger your data, the simpler the charts will look for you. What do I mean by that? I'm about to show you. So over here, remember in this custom time zone, so right here, if you look, I can select from a whole bunch of different time zones. And I really just favorite, as you see, it's got a little star here. You guys may or may not be able to do this if you don't have the paid version, but I know you can at least start, I think, 2 or 3. So what I would do is start the weekly time frame, the 1 week, the monthly time frame, and the 4 hour is probably the main like mini time frame that I use. You won't see some of these. You won't see. I look at 3 months and 6 months because I look at a lot of data. Like I look at the whole picture so I can really see a trend for a long period of time. But you don't need to do that, all right? Some people love the charts like me and they're just extra, and that's okay. The reason why I'm showing you right now the monthly time frame, each one of these candles, aka bricks, is a month. So this is this month, this was February, this was January, this was December, etc., etc., etc. The reason why I like to do this is because if you look, a lot of people be confused, like, whoa, what trend is the market in? Especially gold. It's been simple for the last few years, if I'm being honest, but not all charts are going to look like this. I recommend trading gold just because that's what I like, right? It's off of my experience, but you might not want to. You might want to trade something else, and I want to be able to show you how to quickly not only identify the trend, I want you to see the best amount of data to find the right opportunities on the chart, right? So what's going to allow you to do that is the larger time frames. I talked about this in the tech dives, but if you're Picasso or you're Da Vinci and you're painting a picture, right? You're painting the Mona Lisa. You don't want to just be fixated on the Mona Lisa's nose when you're looking at the picture, right? You want to look at the whole data so you can appreciate the whole picture. And that's what you're doing when you're looking at the monthly time frame. When you're looking at the monthly time frame, you're getting a large amount of data in a small compacted view so you can quickly assess things, right? So I can quickly assess that gold's been in an uptrend for the last 2 years, right? And how I do that, I got my vertical bar here, so I can go on this month, boom. So we've got March, which is the current place we're at, and we've got once it broke this here. All right, now that y'all know what zones look like, right? This was a previous seller zone. Sellers were taking over all the way until we got to the beginning of April 1st, 2024. This month right here. If you guys notice, the chart's been doing what the whole time? It's been making new highs and higher lows, right? So higher highs, higher lows, higher highs, higher lows. What is that? It's an uptrend, as we know. So the market's been steadily in an uptrend for the last 2 years. If you look at it on a larger time frame, it's been like forever. But we're not getting into that. Each one of these is now 3 months, and like I said, that's a lot of data. But hey, that's how you can kind of find out everything you want to know and not be confused about where you're at. That's really why I identified this trend early for. I told my mom to buy gold at the end of 2023 in December, actually, because I saw it about to break. I was like, as soon as buyers take over and they get past this box right here, right, this level where sellers were just parking themselves at for the last 1, 2, 3 years, right? As soon as they got above that level, the market was going to take off. I knew it was, and I told her that in 2023 in December, where I have a text to prove it. Go look at my Telegram chat, and you can see that. But the whole point is, as soon as it broke, it did exactly what I thought it would. Did I think it would go this crazy? No. I'll be honest with you. I just knew I was going to be on the right side when it did go crazy. And I certainly was. So if you look at it since that point, gold's elevated 149% for everybody holding gold. So that means everybody holding gold, that they've increased their holdings by 149% of value. For us traders, that's 335,000 points, which is a lot better than 149%, honestly. Give you an example. You got $100,000 of gold. 149%, that means you made about $149,000. Now, $100,000 on trading with the same metrics. Let's say you're trading, let's talk about safe trading, right? If you're risking 10,000 points, right, times 1,000, that's $10,000. That's not bad on a $100,000 account. But let's say you're a little bit more risky. Let's see, you're risking five. So you had a five standard lots. We'll go over lot sizes later because that's not important right now. That's the more of the trading piece. But let's say, remember I told you the standard lot is one lot, so meaning $1 per point. If you traded $5 per point and you were, now this is for risky people, but you were risking the same 10,000, that would mean that you're risking $50,000 on whatever trade opportunity that is, right? But 5 times 335, that's 1.6 M. So 1 point, even if you did half of that, so you got 1.6 M. Let's do the math. Or 800,000. Like, making 800,000 is better or making $149,000 better. I think we all know which one's better, aka the difference between holding and trading. But we'll get to that later. The whole point is, I just wanted y'all to see the difference. So now, higher time frames. We've quickly identified the overall trend. We can quickly see where we're at in the trend. We can quickly see that we were at a previous high in January, right? So we made a new high, which was 56.01. Let's make this broader. Right. So for the last 2 years, we've been in an uptrend. We made a new high this year in the beginning of January, 56.01. Now, the next month and last month, February, actually was a good month. We ended up positive, continuing our uptrend, buyers continuing to take over after all this crazy movement that just happened in January. So we still ended up with now buyers resuming control in February. So now we're in March and we're going to see what happens going into March. What I feel is that it's going to at least go back to this 56.01 level. Most likely will bounce and keep going, but hey, we're gonna see as we go along. The point is, now I can see the overall data I'm looking at, so I know that I'm looking for the market to go here based on the current trend that I'm seeing and the fact that the last few months are all white team, white team, white team. A little bit of miscalculation here, the matrix, aka, but white team, white team, white team, white team, right? So white team has been taking over for the last 2 years. Do I feel like they're going to slow down now, especially what's going on with the economy and their Iran war? I don't think so. But hey, I'm open to whatever. The point is, I can identify my major moves for the next few months if I'm looking at this. And imagine getting into a trade in a month and you're just not looking at it for a whole year because you know you're on the right side, or you're checking in every month, whatever the case may be. You know you're in the right opportunity for a longer period of time. That's how banks trade. Simple. You want to trade like a bank with big money, or you want to trade like a peon? It's up to you. All right. So look at that, 276,000 points. Ridiculous. But if you look at it, look, as soon as this high breaks in January of last year, crazy movement, right? At no point in time was your trade ever negative, meaning at no point in time did your trade ever go against you, unless you traded literally at the beginning of the month and you were down like 3,000 points, which is nothing compared to what you stand to gain, which is almost 300,000 points. The point is that when you're looking at the bigger time frames, you can see the whole picture, you can quickly identify where you're at, and you can stay locked into the right trend off the rip. You don't have to take too much guessing to see, hey, we're in an uptrend. It's been a serious uptrend, so we're probably going to continue, but I need to wait and find the best place to get into. So now I can jump down to the weekly time frame and see exactly where I want to execute. Boom. So now, as you guys see, we're still in this range, right? We're still in this range of these last 2 years, which has just been going crazy. The markets have been going up. Gold has been going up, 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 and it doesn't look like it's going back down for a while. So I'm gonna take this out my way. All right. So what I want y'all to really see is when I now went down the time frame, I still have that high that I was marked up, but now I got the weeks that I was showing y'all before because we're using the weekly. So we already are familiar with this time frame. We've been using this time frame. Not naturally, this is what you want guys want to do. You want to identify the matrix levels, which we already did because we were on the weekly. Do they match up? They match up perfectly. So there's no real reason to change anything. But if you want to find crazy good opportunity, you can literally wait. Like, look, this is October. This is November. This is December. This is January. February was the best opportunity last year to buy gold. It's that simple. And I can see that just by looking at the chart. Why? Because it made a newer high after all this movement. It made a new high, played around a little bit, and then made another high, or it came back and locked in above the previous high that it just made in October. So February comes around, which is this month. Now we're above this level. Buying it is pretty solid right now. It's a pretty solid opportunity to buy. Just saying. Man, I wish I was talking to some of y'all so I can get some feedback onto what y'all really want to see with this. But so now we've assessed where we're at in the monthly time frame. We've seen our overall trend. We already added our levels on the weekly. We could have done it on the monthly too if we need to, but in this case we didn't. Everything's the same and it matches up. So what do we do from here? Now we take it another step further and go even lower. So now we go to the daily time frame. And for beginner traders, I just recommend you stay on a daily. Like it's good, bro. If you can't find opportunity in a daily and you're beginning, just chill, bro. Just stay out of it. But if you look, as soon as price locks in, I'll start with the bottom. As you see, these zones are matching up. As soon as price locks in above this weekly zone, this monthly zone that we drew was both a monthly and a weekly zone. As soon as price locked in, like I told y'all, I jumped that 80,000 points. Now, what you could have been doing is scaling in, finding new opportunities. So, what does that mean to scale in? That means as the markets are going up, as buyers are taking over, they have these points where sellers try to kick back in for a bit and then buyers take over again. Right? So, that's what I'm looking for. So, I'll find a new high. So, right, the market made a new high here and it started playing around. That's why I'm going to draw a box. Right? When you see the market start to play around, that's where you want to mark it up and identify where it's going to go, what's going to happen, how is it going to keep moving forward, is it going to keep going up or is it going to reverse and start going down. I need to know, so I need to mark it up to see. All right, so I went off of, we're focused on here, so I'm going to zoom in. So the market broke, it locked in above that level, it kept going. All of a sudden I got a wick. When wicks kick in, it's a good time to draw zones, levels, etc., so you can quickly identify, because wicks mean that the other team is trying to take over the territory. That simple. I probably should have explained it like that in the other video, and I'm sorry, but hey, that's why you continue to follow so you can learn. But yeah, so when you see wicks, the other team is really trying to take over. So the wick kicked in. We got a pretty decent wick right here above this little teeny brick. So you got this little teeny brick, right? Got this little teeny brick, and you got this big wick. So that means sellers try to come back in, try to take back control, right? And they were fighting for territory. They went up. Buyers took over. Sellers tried to kick back in. And so we ended up still in the zone. But as soon as buyers got back above the zone, it was like, nah, we already exited the territory. We're locking in. It's our show. Boom, take off. And then the market just keeps doing it. This is how you follow your trade upwards, or you trail your trade, is what they call it, right? When you're following your trade in the direction of the trend, you're trailing it, meaning you're continuing to lock in your position. So to what I mean, let me draw it. So let's say you bought right here, all right? Let's say you bought right there. You placed a buy order there. And then market does this, all right? And you're like, oh, well, I'm up 3,500 points. What do I do? Do I stay in? Do I get out? You have the ability when you're trading to take your stop loss, which I'll explain this later. But a stop loss is something that protects you from losing your whole account and only a set amount that you choose to risk. So your stop loss is down here. You take your stop loss from here, and we call it break even, or you put your stop loss right at or right above your trade, so that if it knocks you out, You didn't lose anything, you didn't gain anything. You were just neutral and you felt like you were wrong about that position or that entry at the time. All right. So now you're at break even, you got nothing to risk. You're in a free trade, right? That's what we call that, free money. Because you have if it goes up, you make money. If it goes back down, hey, you didn't lose anything, so it's all good, right? What I like to do is like, okay, hey, this happened. The wick, remember what I said about the wick? The wicks means the other team's trying to take over. So what do? Boom. All right. Added a level there. As soon as it jumped above, okay, boom. Buyers locked in and they locked in pretty strong because if you look at all these little candles, this candle just crushes all of them, right? So buyers came back in with some strength. We're back in. It didn't stop your trade out, meaning it didn't go back down and close your trade out. So your trade's still in. So you're still making money, and now you're still within this trend, and you can take another trade right here. For this trade, your stop loss would be below here. So you'd be risking about 12,000 points, but look how much you're going to be able to make from this opportunity. So you're risking about 12,000 to gain. Oh, sorry. I got y'all on this. I keep forgetting my face is up there. I apologize. To gain about 54,000. Vomit. Anyway. So, as you guys see, as you're trailing your trade up, you kind of just keep marking it up. So, look, we have wicks kicked back in. Boom. Now, in this particular trade, if you did break even, it would have taken you out. And that's okay because you still had this trade in. And you just keep going up. And you keep going up and you keep going up. You keep doing the same thing. Boom. What's cool about the next position, right? You still had this trade in. This trade gets wiped out positively, right? You broke even because you were in some profit. You broke even. You can. The coolest thing about trading is you can decide, like I said, how you want to trade. So you can break even or make your trade neutral whenever you feel like it. So once that day closes and the next day closes, and you start seeing the wicks, and you're like, it might reverse against me, and you break even. Hey, you didn't lose anything, and you still had another trade in. And you'll always have more opportunity. One thing, I'm going to make sure I say this loud and clear. One thing that you'll always have is more opportunities in the chart. You'll always have more opportunities in the market to win. There's no shortage of opportunities to win and execute trades in the charts. Let me say that clearly. The reason why I say that is because I wish somebody would have told me that, so I wasn't trying to get rich on every single trade, meaning leverage, over leverage, lock in well above my means, right? Trade a one lot on a $3,000 account and assume that I'm gonna get rich, right? I don't have to do that, right? You don't have to do that. This is a consistency game, a compound game. As long as you continue to find the right opportunities and get the right opportunities, you will make money. It's that simple. So you got wiped out of that trade positively. Same thing here. So you took that opportunity. Your stop loss was down here. Now you're risking 14,000 points. Now, I'll save this for the other video to go in depth, but you have the opportunity to close out trades or keep trades. It's always up to you. So the smart thing to do would have been to break even after the market went up 10,000 points. It would have been either to take some profits and break even, and we'll talk about scaling out of trades in another video, but you take some profits and you break even and you let the rest flow. So if you broke even, went neutral, you would have been knocked out again, obviously, in this trade. Now, after 10,000 points, definitely, especially on gold, after 10,000 points is a sweet spot to at least take like 50% of your trade out, which you can scale out your trades, like I said. So that's the beautiful thing about trading. There's so much stuff I got to tell y'all. It's crazy. But back to it. Now, what happens again? As we're seeing buyers continue to take over, we're seeing these wicks and we're seeing sellers try to take back control, but then buyers retake back over. We keep getting new positions to take new trades. Buyers take back over, it's time to buy again. Boom. Right? What you'll note about this one in particular is as soon as you buy, one, two, the trade went crazy. You got 25,000 points right there with limited drawdown. And guess what? You didn't get knocked back out. After the trade goes 25,000 points, you want to take some profits, bro. And I'll teach you all that, like I said in the other video for that specifically for trading specifically. But I just showing you guys how you use multiple time frame analysis to identify the major trend, see where your trend's at, see where the market's moving, then continue to scale down so you can make the data bigger in your mind, simpler in your mind. And then as you're going along, then you're just using that last, which should be the daily for y'all, to kind of scale along your trades. Scale along your trades. As you're seeing those higher highs and the lows start playing games, put new levels, put new zones, identify that new territory that's being created, and keep it very, very, very simple. The more you do that, the simpler it'll be to find opportunities, execute on those opportunities, and not get stuck in bad trades. That's the one thing I want you guys to avoid. That's why I'm teaching all this way. I know it might seem like I'm maybe, it may feel like, oh, you're leaving out stuff, but I'm really not. I'm keeping it so simple so that you guys jump into this game in position to win, because nobody did that for me. When I jumped into the game, it was a bunch of chaos. Nobody's really showing me exactly how to win. Even when I learned, and I'm definitely gonna take this opportunity to shout out Sean Lee, because I learned from his Technical Tuesday videos years ago, right? And that's what helped me learn how to do support and resistance. And basically these zones I'm showing you now are support and resistance. But I like to explain them simpler as buying and selling territories, right? No one explained this to me when I started to help me keep it simple so I didn't overcomplicate this game. And I found myself in traders prison because of it. I took L's because of it. I lost my confidence for a very long time because of it. And me talking to you guys this way is going to help you not repeat those same mistakes. So yeah, that's my story. But yeah, multiple time frame analysis, use it, identify it. And if you want to go down even more, the last one you should do, and I don't even want to tell y'all this. If you're feeling froggy, if you're feeling risky, please keep in mind that this can lead to overanalyzing. Although you may find more opportunities, you're also going to increase your risk level when you start looking at this time frame. But hey, I'm gonna teach you course, why not? If you stayed here this long, the advanced part of all of this is leveraging the 4 hour to do the same thing you were doing on the daily chart. Now, this is for more active traders who probably do look at their charts every day, if not multiple times a day, at least twice a day, right? Or once a day, whatever the case may be. The traders that are more aggressive, that have the time or the resources, and they want to really take trading full term, this is what you're going to do, right? You're going to look at all those time frames, go from the daily, mark up the daily, and then get to the 4 hour so you can find the sweet spot opportunities. Now, that is going to expose you to more risk, because you're going to see things, you're going to see levels break, and you're going to jump in early, but that doesn't always lead to more profits, right? I shouldn't say like that. It's not that it doesn't always lead you to more profits. What it does, it exposes you to more risk, because now you're trying to take more trades. It's a mental game, right? So if you decide to trade the 4 hour, please realize that you are exposing yourself to more opportunities to take L's. Now, do I use the 4 hour? Yes, but it's a more advanced skill, and it's also in conjunction with the daily and the other time frames. However, because of how I'm teaching y'all to mark up the chart starting from the monthly, weekly, daily, and then the 4 hour, you should automatically be putting yourself in the right spot to win regardless. I'm just letting you know that it does take more laser focus to look at the charts on a 4 hour and find opportunity. So please, 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 please promise me that if you guys are new to trading and you're looking at this video, do not trade the 4 hour until you're like a year in, right? Extra safety precaution, because I don't want y'all to lose. But hey, I also don't want to keep y'all from winning if y'all want to risk it for the biscuit and y'all realize that at the end of the day, life is life and that you'll win it back. If that's your mentality, hey, the 4 hours for you. The only thing I want to say is you're gonna have to get a little bit more aggressive about your zones, right? Or you could just keep the basics, and continue to do the same thing. Wait for it to lock in above your levels. These are all daily levels, as you guys saw. Wait for the 4 hour to lock in above daily levels and keep it moving. Don't make 4 hour levels. Why am I telling y'all that? Not that you can't, because you can. I'll make one for you right now, and you'll see that it'll work. Boom. Right here, right? One failed, sellers took over, boom. It leads to opportunity. That's not what I'm telling you, not. What I'm saying is it can also trick you, because the data is now shorter and more compact, and you're getting closer to that retail side of data. I'm gonna make this very, very simple. The banks trade big data, retail traders trade small data. So anything lower than the daily is retail, right? They're not swinging, they're intraday trading, meaning they're trading within the day. Daily and above, more of the bankers, although they do weekly, but let's say daily and above is the bankers. That's the swing trading, meaning they're taking trades for a longer opportunity, bigger amount of points, steadier opportunity, steadier profit, right? The bankers, it's the tortoise wins the race. With the retail traders, it's the rabbit trying to win the race, but usually the tortoise wins the race. So I came in the game as a retail trader and I realized that it's not the best place to look for opportunity because I came in the game as a retail trader and an intraday trader. And what I will say is, when you look at the market from a swing trader perspective, you usually find yourself being in the move properly for a longer period of time without having to worry about the move. If you take a trade on the 4 hour, using any 4 hour levels, 4 hour zones, please, please, please make sure that you're watching it every day. Because if you're not watching it every day, you're exposing yourself to a lot of risk. It's that simple. I want you guys to trade as swing traders do, as the bankers do, because the bank is where big money is made, and I want y'all to be able to make big money. Also, the bank is where consistency is, and I want y'all to be consistent. So, with all that being said, that's pretty much all I had to cover in this video. We talked about multiple time frame analysis, how to do it properly, how to keep it simple. You're using and creating buyer and seller zones at daily levels, well, monthly levels, weekly levels, and then daily levels. So, yeah, that's been it. Maverick's point of view, and we're out. Peace.